What's going on, everybody? Been a little bit wanted to go through today in the market. Just looking at our charts for all the newcomers and whatnot. First thing you want to make sure on the bottom right, you're at New York time. So UTC 5 New York. We'll click that. Working off of electronic trading hours. Settings, as far as more settings, just so you guys see this. This is how I have everything. So my green candles are my buying. Red candles are my selling. The borders and the wicks of the candles are black, so it's a nice screen. For the background, you want to make sure you click white, and then the opacity is all the way down. Precision default, time zone is UTC. For the canvas as well, the background, you want to make sure it's white, vert and horizontal lines. Those are going to be here. Again, white with zero opacity. Otherwise, well, they're white, they would look like this. Otherwise, you would have all these lines on your chart, which you don't need. So making everything white. Crosshair is just this little thing right here. You can make whatever color. I just keep it on black. Text is black. Lines, once again, opacity zero. Pane is here. These stay the same. Trading, buy sell options. One click. You could do that if you want. Appearance is going to be positioned in orders. Execution marks is just going to have your arrows. Alerts is if you want to set an alert. But overall setup when we're trading, right? So we're going from Friday until Monday to find your new week opening gap. So I like to do it on the 5 minute. So Friday is going to be 4:55 p.m. because that's when market closes. And then Sunday, 6 p.m. There's going to be normally a gap. This one here is an impulsive move. So the candle body close is going to be up here. We'll go ahead and make that black. I do three, and then the open is right here. So this is going to be your support and resistance for this upcoming week. You want to do it for the previous 4 weeks, and then again, you'll have your fib, and then you could mark it in the middle like that. I actually stopped doing it this way, but for the sake of this video, I'm going to show you guys. We'll make it blue dotted line. One is going to be just to indicate consequent encroachment of that 50% if you see how price respects it. So um, from Friday, right? What we want to first see is where's price. So as we see, price is digging into this order block here, as well as this one here. If we go to the weekly time frame, right here, you see we had this order block that we wanted to get filled in. It did, and it even came and traded into this order block here. So on the weekly time frame, right, when you're doing top-down analysis, you grab your fib and you'll find your swings. Now your swings are going to be a three candle pattern sequence that for me, I identify it like you would your index, your middle, and your ring finger. So it looks like this. You would have a U, and then for a swing high, you would have you would put an umbrella over it. So this is going to be your swing low. This is going to be your swing high, right? The reason we're doing this is because this is the lowest low. These are equal lows right here. So that's going to be a potential area to target liquidity, but there's an order block here. Boom, takes this candle high out. Price runs away from it, trades into it again, starts expanding higher. How you measure this is you take your fib from this low to this high. Now, price is in a really deep discount even after this week. So you could be looking for buys. This is going to be on the weekly. Now, on the daily, though, yes, we had that. But if we scale into a daily time frame, again, top down analysis, we're looking for our swings. Notice how we have a swing high here, one, two, three, and a swing low in a discount, right? Also, from Monday of last week, look where price was. If we use these swings, price is now at a discount. We could expect it to buy up. We have an order block right here. This is going to be your bearish order block. So price traded into it and price got shot down into our fair value gap right here. Look at the reaction. So at some point in time, price traded up into this. While we were in a discount, price traded back up, started selling down. Going over today's trading though, So here is, what day is this? Monday, Tuesday, Wednesday. Here is Wednesday. Here is Thursday. Returns right back to this order block. Support and resistance on the new week opening gap. So look how price can't close above it. Wicks at some point price was up here, then it sold down. And remember, with this candle, right? I want a bar replay so you see. Anytime you have a formation of a swing, so remember, index finger, middle finger, ring finger, index finger, middle finger, ring finger. This is now the range you're looking at. Look where price is. So it starts off in a discounted market, right? Look how price opens here, buys all the way up, trades into this order block again, and then look, it immediately melts down. So what we're looking at the next day is, okay, where would price want to go? Now remember, we saw this order block on the weekly time frame, which is right here. Now this is a bullish order block because of what's called institutional order flow. How price is respecting these swings. Again, these equal lows are going to be something I'll mark right here. I'll mark it as liquidity. So eventually price may want to run down and get there. It may not be this week, it may not be next week, but I'll just have it on my chart. If we go back to our daily, let's look at the order block. Okay. Hasn't been traded into. Let's go to Friday's trading. So how I set up my charts the night before, what I do is I take my vertical line, put one here at midnight. It's going to indicate opening price. I always put one at 2 a.m. So 2 a.m. is here. 5 a.m. is here. So this is going to be my London session. And then I'm going to do a yellow one at 7 a.m. and then a yellow one at 10 a.m. And then for my 8:30 open, what I do is I normally try to make it like a Carolina blue or like a purple color just so it's distinctive. And at 8:30, I'm looking, okay, what happened? So here is 4:45 p.m. We'll just play this out. Notice how price trades into this order block, starts to get a reaction. Here is my midnight open. So the way you use midnight open, and my interpretation of it is that this opening price, any swing, whether it's a swing high or a swing low, above or below midnight open, based off of what your analysis is, you could use it if it fails to run it on SMT or Dow. So right now we're looking at NASDAQ. Here is, so we'll go ahead and delete that. So this is the midnight candle. Now here is our range for London. So 2 to 5 a.m. right here. So the first thing we see is London sets a low right here at 3 a.m. Then it sets a high right here at 4:15. Price starts to go low, lower, lower. It finally runs this low at 4:45. But we want to make sure we have the formation of a sell rate. So the sell rate is now going to be here. Same thing as a swing. Again, ring finger, middle finger, index finger entering on this fourth candle. But look at the time, 5:45. That is not an ICT kill zone or ICT silver bullet. So what I would do, or what I did do, is delete these two lines right here, and then I waited for the AM session. Now, when we talk about bias, right? Open interest, the concept he taught in 2016's mentorship. If we go to indices on barchart.com, we're going to look at NASDAQ 100 E-mini. Once we click that, right, you want to find the contract with the most open interest. So right here, 300,000 NQZ 25. Now look what it says up here, NQZ 25, right? So we'll go ahead and click that. And by law, it'll tell you what companies are looking to do this week. So now long position is anytime you're long in the market, they're long, it's buying. So 149,000. Short position is 198,000. Perfect. So we want to be, as of October 7th, this is where you want to be, right? Now, institutionally, we did look up, and remember, the previous day we saw that market was giving a buy signal, right? Now, how do you gauge which one, or at least have a bias? If it's institutional, you could come to commitment of traders. Commitment of traders, after this, you're going to click snapshot chart right here. Snapshot chart is going to bring up this graph. And once you click the candle, right, as I hover over this candle, you're going to see the box over here on the left. It's going to be over here. It moves as I move my mouse. But you want to see if interest the previous day is higher, you're going to be looking to sell market. If interest is lower, you're going to be looking to buy market. So if you're in a discount and interest is high, again, you could one, stay away from the trader. Two, you need to see institutionally where are we with the fib. So going into today, right? So today was the 21st. Look at Wednesday. Wednesday was 291. Thursday was 300,000. So that's high interest. Now, I also said though, we were in a discounted market. So it's like, okay, do you really want to be selling in a discount? But what can we sell it to? We know that this order block was sitting right here. So we could sell it to this order block, which is price 24,065, right? Going back to our 15-minute for market to sell, we would need to have a range. So let's play this a little bit and let's define our range. So the first thing that I saw this morning when I woke up is a swing low. So when you have this swing, again, index finger, middle finger, ring finger, right here, that is going to be my low. Then I need to find the same thing. Look how it gives us a high, right? Now, when we have this, we got to think, okay, are we in between our kill zone times, right? We are in the kill zone times because remember, it's from 7 a.m. until 10 a.m. New York time, Eastern Standard. So when we have a swing, this now becomes our range. And then you could identify the range with this high right here. Let's make this 2. We'll make it purple. We could go ahead and delete this order block right here. This is going to be our range. Now, for us to have a sell model, we would need to see if price can take out this high, right? Run liquidity because we're looking to short the market and then give us what's called a sell rate. So a sell rate is the formation of 4 candles. So 1, 2, 3. Remember, 8:30, you're looking at price to the left, like what has happened to the left. So at 8:30, this purple candle, I look to the left and say, okay, well, a high was ran. Remember, this right here, a high and a low is in the form of liquidity. Any high and low is in the form of liquidity, right? Okay, cool. We see that this high gets ran. So the next candle we would be looking to enter as long as these 3 candles don't get ran. And even if they do, we would have to start over again because then that would be what's called our sell rate. So right now, market has given you what's called a sell rate. Now, because of the time, it's 8:45. This candle is 8:45 on a 15-minute chart, meaning this candle opened at 8:45 and closes at 9 a.m. So ICT macros are going to be from the last 10 minutes of an hour and the first 10 minutes of an hour. So 8:50 all the way until 9:10. If you see a oh, I thought I said macro. If you have a trade setup, you're looking to aim this 20 points. So how this works, right? As soon as this candle opens, right? 15, we're going to scale down. So we're going to go from our 15 to our 5 to our 3 to our 2 to our 1. I don't really use the 2 because these times 8:45, 8:55, they line up with the 5, the 3, and the 1 minute. Times like 8:57, 8:59, they line up with the 2 minute, but a lot of times price may leave without you. Now the rules are once you have your range, and price runs a high or a low, you're aiming for the nearest swing. Now, the nearest swing is right here, 1, 2, 3. This is where you'd be aiming for, but because of time, it's 8:45. Inside our macro, we drop down to the 5 minute. The first entry that we see right here, look what time it is, 8:45. You have an order block. So as soon as you see this, we could be sellers. So this is what I did this morning. And then we'll just do a sell limit with 2 contracts right here at the candle body. This is a bearish order block. So right here at this candle body is open, and you can see the prices up here. So the open, high, low, close right here. So this open should be at 24,250. Look where my price entry is. I'll hit sell right here. And now look what happens. So 8:45, boom. Look, price provides me a swing, and forever and always your stop loss goes above the swing. The next candle, look what it does. Instantly drives in. My stop loss will go here. So $1,100 and then 20 points from this entry. So 24,230 would be your take profit. The next candle, look what it does. Hits TP, right? Which I messed this up, my bad. I want to see if it'll sell down again. All right, cool. So hits TP. Now, remember, we're still in this macro time, right? This macro time ends at 9:10. Once price takes out this candle open right here, this is another order block. So what would we be looking to do? We would have a sell limit again. We could be sellers here because nothing has told us that we can't sell it. The next candle, look what it does. It trades in. Remember, your stop loss is still above the swing up here. So stop loss will go here. Now, this is a little higher lot than the previous in terms of risk to reward. But it never hits our stop loss. So 2401.25 would be our TP, another $800 play, which is right here. We could confirm that. So price drives up 905. Here's 910. Here is 9:15. Now look, another order block forms, but what time does it form? 9:15 outside of our macro time. So this is a low quality setup. It's not a high percentage setup. What you can do in this instance though is move this stop loss right here. The next candle, look what it does. Hit your take profit. So here's 920 for people who may not understand the buy rate with a sell rate, people be like, oh, well, I could hop in right here because here's a fair value gap. 930 is about to open up. Surely it's going to drive into this and sell down. Well, here's 920. Here's 925 right here. Here is 930. Look what it did. It came and wicked all this stuff out. So it wicked all this stuff out. So that was pre-market 8:30 session. All right. So then we go to our 15 minute. We got to go back to our 15. Remember, your 15 minute is always going to be your bellwether. Now, when you're trading on your 15, we can see price action 9:30. Let's see what happens at 9:45. Big impulse candle, right? Where's our range? We got to define our range. So now we have a low. This low was taken here, which is a good sign because we'll have more points. And then we have a swing high that was taken right here. So here's that. So we have 1, 2, 3, 1, 2, 3. Our yellow candles, remember, they indicate that we're inside our kill zone for the AM session, right? Now, because this candle right here at 9:45 takes this high, I believe we had news at 9:45 today too. Yep. So 9:45 news came out positive, drove price higher. This is the Judas swing at 9:30. People bought it up here once these stops got ran. So market activated these stops, sold them off. A lot of people probably had a stop loss here, maybe here. We know, okay, we just had a sell raid right here at 8:45. We hopped in on this fourth candle. We want to see if we could get the same thing. So 1, 2, 3, 10 a.m. Okay, cool. Now we have 10:15. Before I do that, so we have a range right here. Here's our high. Here's our low. We have a potential entry at 10:15. For me personally, I wouldn't want to see 10:15 open and start running these highs. Otherwise, I know, okay, price respected these bullish order blocks over here. Because remember, once this candle opens, this right here is your whole order block going to the upside. What do we have in our favor? We have open interest, like we just checked for NASDAQ. Also, if we compare S&P to NASDAQ, look while I put my yellow lines here. Notice how we have this high right here. So 1, 2, 3, and then 1, 2, 3. Right here, notice how nothing was able to run this high right here at 8:30 on S&P. But for NASDAQ, look what happened. This high was ran. This is what you call an SMT divergence because market is doing the same thing, but there is a failure swing on the 15-minute time frame to take out this high right here. If we go down to a lower time frame on the 5-minute, look what it looks like. The candles line up at the same time. So 9:45, 9:50, 9:55. Price takes out this high. that is sitting right here at 820, 825, right? So cool. Now that we have that, we're gonna go to 1015. Now 1015, when it opens, look what you get. So price at some point, this is a bearish candle. So here's the open. At some point, price drove up here. Remember, we go from 15 down to our 5. At 1015, we have nothing on our 5. If we drop down to our 3 minute, let's look at 1015. Look what price gives us. So remember, the one thing that a lot of people misconstrue about ICT concepts is that order blocks, right? So this candle is at 1015. Look what price does. It sinks down and then leaves this order block right here. Now this is a bearish order block. This is a bearish order block. So we can mark it as OB negative, right? Right at 1015. So 5 wasn't clean, dropped down to our 3. Now this is a big order block, especially if you're trading with the regular contract. So what we could do is actually cut this in half, right? If we're anticipating a sell, so we could be sellers here, sell limit at 50% of this order block. Our TP now is going to be the liquidity that's engineered between our kill zones. So 7 to 10, our TP is going to be here, aiming at this swing. I got to move this. Please forgive me, guys. My bad. Our TP is going to be here, aiming at this swing because it falls in between the ICT kill zones. All right, so there's our TP. When we go to our 3 minute, we'll have our sell limit. The next candle, look how it drives up and it gets the reaction. Even if you entered here, it's not a problem. 24,098. That's not a problem because I mean it is the order block. Always and forever, stop loss goes above the swing. So we have this right here. That's going to be your swing. Your stop loss is going to go here. It was a pretty big stop, aiming for right here, right? Now this trade activated you at 1018, drives up even higher, back into 50% into this order block again. Drives up even higher for people who put their stop here for an aggressive stop. Next candle, you want to see displacement. Now, huge displacement right here, right? For price really running away from that area. I'm going to delete my fib right here. This is now going to be your new order block right here. Bearish order block, OB negative. We want to see if price could displace away from it or is it going to trade back into it? So this candle opens, trade right back into it. The next candle, look what it does. Gives you another order block. Look how close it is to your take profit. Now we're in ICT silver bullet. Remember, 10 until 11 is going to be silver bullet. At this point, you can move your stop right here. So again, this grabbed us at 1018. By 1036, 18 minutes later, we had our profit. Now let's see if we could have found something on the 1 minute. So for the 1 minute at 1015, me personally, based off of what I marked on the 3, again, once this candle, this is 1016, once it took out this low, or I'm sorry, this candle body open. Let me replay it so you guys can see. Once it took out this candle body open, I would have treated this whole thing as my order block, not just this green candle right here, because the market will do something like this to fool you. Because again, it'll take out this candle body open, trade into it, and look what it does. It displaces. You think you're right. Your stop loss is here. Literally, the next candle drives higher, wicks you, sells down, sells down. I think this becomes an order block as well in a fair value gap, but I want to see if it trades back. Yeah, it's another thing. So this is the thing about higher time frame entries as well. If you see what price does right here, for people who didn't know in hindsight, I mean, you just think, oh, well, this is an order block too. Fair value gap trades into it. I'm in silver bullet. Next candle trades and wicks you out. So this is why it's important to go top down. So go from the 15 all the way down. We went to the 5 to 50. We didn't see anything. Right here on the 3 minute, very clean and efficient trade, right? So this is the AM session. So that was that. How we work PM session now, right? Same thing. We're still going to be looking for a range. Like the biggest concept from ICT, even as a 2016 student, is understanding your trading range. So nothing has really changed. I'm still bearish based off of open interest. If we go to our 15 minute now, all we're doing is we're going to take our yellow line and move it 11:30. Here's the thing, in a lot of his videos in 24 and 25 mentorship, he talks about um lunch starting at 11:30. I've moved it to 11:30 because there have been cleaner entries. I've noticed that, and swings that they play a part in providing a good range that you could use, and market respects those ranges. So I use 11:30 to 1:30. So 11:30 to 1:30. Let's go ahead and play this out. As you can see, once price takes out this low right here, again, falls in that 7 to 10 kill zone. This right here is 5:30, so do not fall for that. Just take what the market's giving you, right? So in between here, we have our range. So we have a high. So same thing. Remember, we want to use that middle finger, index, and ring finger. So we have this high right here, and then we have a swing low. With these swing lows, you want to make sure that it falls in between that 130. So if this candle was 145 as this swing was forming, it would not qualify. Right here, we have a range. So there's our low and there's our high. Now remember, if we want to go bearish, if we look in the sell market at 130, we treat 130 like we treat 830. So we'll look to our left and say, okay, where's our range? I like this range because we have a distinct high and a low. There's not candles intertwining or short-term or intermediate highs and lows in between. So I could go and delete these lines right here. And remember, four candles that form a buy stop or sell rate. I'm sorry. So here is 145. Boom. This is the first thing we get. Afternoon, you did not have an SMT that was clean enough for me to present to the world. So first candle, 2 o'clock. By 2:15, we'd be looking to enter this as long as this high remains. But look what happens. Price drives higher. That's fine. At 2:15, it drives even higher. So now we got to start over. One, two, three. So 2:30. Okay. If we look here, look at the price point right here. Look at the high, 24,596, 24,594. So one, two, three. We're looking to enter this trade at 245. So the same thing. Again, I like starting at the 3 minute for myself. Now we can look at the array. So what does price give us, right? So at 242, that's not 245. We got to wait for this next candle to open. All right, cool. So here's 245. What does price do? Well, this candle price is at 24,493. So what do we get? We get an order block that forms to the downside. So this is going to be a bearish order block. But not only that, we have a fair value gap. And again, this is ICT textbook 2022, where we would look to short the market here. We could be sellers right there. Stop loss. Again, here's the aggressive method for me. I've just seen too much where price it doesn't respect the aggressive. I just always put my stop loss forever and always at the swing. And remember, you know it's a swing, index, middle, ring finger. Price goes right here. Now, what are we aiming for? So in a range like this, right? Here's your low. This is always going to be your take profit. It's Friday. Market has already got to some of its objectives in terms of the weekly arrays, right? So you want to study major arrays. So what I like to do from low to high, you're going to grab your fib. You're going to go from low all the way to high, right? I always mark up 50% because that's a great place to pay yourself. So here's 50%. And then if we go to the 15 minute, look what price shows. Here's our swing, 50%. There's an order block here. On the 5 minute, there's also a order block here, which again, I want price to, again, I would love price to sit here and drop 311 points. I mean, this is a beautiful 4-to-1 trade. Yeah. All right. I'm recording a video. All right. I would love to see it come down 300 points, but as we drop down to 245, same thing here on the 5 minute, price could drive higher. This looked very clean for me on the 3 minute. So once again, I could be a seller. Put a limit entry at this candle's high right here. Look how price respects this. Now on the 15 minute, take profit again. Pay yourself on the way down. Like this is what you're aiming for. You are aiming for this, but take profit. Look how it gives you a beautiful 4-to-1 setup. So 50%, 5 minute order block right here. Maybe the first array fair value gap in a discount right here. So we could aim there. Right here, bigger fair value gap here, right? So if we go to our 3 minute now, let's see what we have once we clean up market, clean up the charts a little bit. Stop loss, forever and always at the swing. Let's just aim it here. We could confirm that. I don't need short position anymore. So price drives into this immediately. So literally the next candle price drives into it, 248. Then look what it does. I like the displacement, the ability to run away. It takes out this candle as well as this one. So now this whole thing is your order block. I wouldn't move my stop to here just yet. I want to see how price reacts. Next candle comes back up, gives you a fair value gap. So just so you guys see, here is your fair value gap right here. And also too, if you think of this, right? So price tag is in at 24,513. It instantly dropped to 24,445. So what you're looking at about 75 points instantly, which in Silver Bullet for afternoon, you're looking at 2 p.m. to 3 p.m. It's really 30 points. That's his rule. Um, to 50% to a array. What price does, trades into there, creates an order block again. And look how the accuracy is with these, right? So look where price is trading into. Look how it's respecting this order block. Taps it once, twice. If you had taken this, you would have got stopped out at 309. Now, again, same thing. We're in a macro time. So macros are going to be, once again, the last 10 minutes of every hour, all the way to the first 10 minutes of every hour. So right here, let me go to a 2 minute because it'll have it. So here is 250 all the way to 310. Again, order block right here. Look what price drops into. And for me, I always make this orange just so I know, okay, I'm in the macro time. Back to the three because that's what I entered on. Next candle drives higher. Now, once I see this, look what price does. This is my new bearish order block. I want to see if price could displace lower and give me a fair value gap. And sure enough, I have this fair value gap. At this point, I've moved my stop right here. Look where price goes straight to 50% order block. At this point, we could go ahead and buy the contract. So 5,000 on the screen, buy it. Okay, at this point. Now stop loss is here. Now I was done for the day here. The next, I believe it ended up selling way lower. It created a swing on the 15, and that's another thing you got to watch. So this candle right here before 315 opened, see how market created a swing. Now, because we're outside of the kill zone, there's no telling that this candle did like was gonna do this. It could have eventually started buying and then reached for that. So just a word to the wise. Once it's at 50, hits the order block, you know, price indecisive, misses this first fair value gap. It's really on the 15, so we should have been out of this. Next candle here, boom, hits your fair value gap, comes even lower. On the 5 minute now, comes to this bigger fair value gap, and these are just entries that you could have exit points that you could have came out of. So was that right there? All the way to our low. Now at this point, 355, really to 430, I'm done. Again, you saw a lot of points in this, and then that was the end of the trading day. So again, open interest, new week opening gaps, institutional order flow, and arrays. The biggest thing that I stress for people as new traders coming into this space where it's like, I don't really want to watch ICT, or I'm seeing things that are more exciting, or people who aren't as drastic as him. You just got to treat him like, he's your boss. Like, treat trading like a job. Really day trade. Don't just be out here throwing darts, and understand when a buy rate forms and a sell rate and when to enter. Remember, it's going to be time and price, not price and time. We saw the 8:45 morning trade, and we saw the 10:15 one, then we just saw the 2:45. So God bless all you guys. Thank you so much, and I'm excited for this journey.